Hey everybody. Okay, so this is hard. This is difficult, but I want to talk about Waitr ASAP pretty openly. This is frustrating. Um, so I was reviewing, trying to find out if and when the offering was going to end. I think it was a 30 million offering that they had announced in September. And I was like, this thing should be done by now. And whenever they announce that it's done, it should make the stock go up. But I came across something else instead. So we're gonna talk about this. Let's look. Um, on let's see. I'll go back up here. Oh, when did they file this? I think they filed this on the 16th. Okay. Yeah. It's a prospectus supplement filed on December 17th. It's for 50,000 or $50 million offering of company stock, common stock. We have entered into a third amended and restated open market sale agreement with Jefferies related to shares of our common stock offered by this prospectus supplement and the accompanying prospectus. In accordance with the terms of the sales agreement, we may offer and sell shares of our common stock having an aggregated offering price of up to $50 million from time to time through Jefferies, acting as our sales agent. Our common stock is listed on NASDAQ Global Select Market, NASDAQ, under the symbol WTRH. Now, this is going to change. They're actually going to be listed under ASAP, which is going to be their new name. Um, this talks about like the breakdown of like how this is going to go down. $50 million worth of stock. Okay. The offering. Common stock offered by us. Shares of our common stock have an aggregated offering price of up to $50 million, up to 182,171,966 shares of common stocks, as more fully described in the notes following this table, assuming sales of 55 million shares of our common stock in an offering, at an offering of 90 cents per share. That's assuming 90 cents per share, which was the last reported sell of on the NASDAQ on December 15, 2021. At the market offering that may be made from the time to time through our sales agent Jefferies. Okay. We intend to use the net proceeds from the offering for working capital and general corporate purposes, including sales and marketing expenses, general and administrative expenses, capital expenditures, and other corporate purposes. We may also use a portion of the net proceeds to acquire and invest in businesses, products, and technologies that are complementary to our own. See the section titled Use of Proceeds on page S7 of this prospectus supplement. Okay, risk factors. NASDAQ symbol. So, unless we indicate otherwise, the information in this prospectus supplement is based on 126,616,410 shares of common stock outstanding as of September 30th and excludes, as of that date, 21,774,330 shares of common stock issuable upon the vesting of outstanding equity awards under the Waitr Holdings 2018 Omnibus Incentive Plan, which is basically, I think, the CEO plan. Whenever they hired him in, I believe, maybe, no, they hired him in 2020, but it'll include those. And then 5 million shares of common stock reserved for future issuance under the 2018 incentive plan. Oh, okay. So Risk related to the offering will have broad discretion in the use of the net proceeds for this offering, and despite our efforts, we may use the net proceeds in a manner that does not increase the value of your investment. You may experience immediate and substantial dilution on the net tangible book value per share of the common stock you purchase in the offering. In addition, we may issue additional equity or convertible debt securities in the future, which may result in additional dilution to you. Then they kind of do the math based off of 90 cents per share. So sell shares of our common stock in an at-the-market offerings, and investors who buy shares of common stock at different times will likely pay different prices, of course. If we fail to continue to meet all applicable NASDAQ listing requirements and NASDAQ determines to delist our common stock, the delisting could adversely affect the market liquidity of our common stock, and the market price of our common stock could decrease significantly. NASDAQ requires that the closing bid price of our common stock does not fall below $1 per share for 30 consecutive business days. I can't believe they are actually talking about what I talked about in a video, which people kind of got mad at me for, but hey, cool. Historically, our common stock has experienced substantial price volatility, particularly as a result of the COVID-19 pandemic. Significant fluctuations in our revenue, earnings, and margins over the past few years, and variations between our actual financial results and this published expectations of analysts. The closing price of our common stock has been below $1 per share for 4 consecutive business days up to and including December 16th, 2021, and as low as 80 cents per share during the current fiscal year, and 31 cents per share during the fiscal year ended December 31st, 2020. And there can be no assurance that we will continue to meet this or any other requirement in the future. If we are unable to maintain compliance with this closing bid price requirement, our common stock could be delisted from NASDAQ. If this were to occur, trading our common stock would most likely take place in an over-the-counter market for unlisted securities. An investor would likely find it less convenient to sell or to obtain accurate quotations in seeking to buy our common stock in an over-the-counter market. And many investors would likely not buy or sell our common stock due to difficulty in accessing the over-the-counter markets, policies preventing them from trading in securities not listed in national exchange, or other reasons. In addition, as delisted security, our common stock would be subject to SEC rules as a penny stock, which impose additional disclosure requirements on broker-dealers. The regulations relating to penny stocks, coupled with a typically higher cost per trade to the investor of penny stocks due to factors such as broker commissions generally representing a higher percentage of the price of a penny stock than of a higher price stock, would further limit the ability of investors to trade in our common stock. For these reasons and others, delisting would adversely affect the liquidity, trading volume, and price of our securities, causing the value of an investment in us to decrease and having an adverse effect on our business, financial condition, and result of operations, including our ability to attract and retain qualified employees, to raise capital, and execute a strategic alternative. Dilution. Oh, this is frustrating. So frustrating. Our historical net tangible book value at September 30th, 2021 was $53,411,000, or approximately 42 cents per share of our common stock. Not giving effect to the sale of our common stock in an aggregated amount of $50 million in this offering, at an assumed offering price of 90 cents per share. The last reported sell price of our common stock on NASDAQ on December 15th, 2021, and after deducting estimated offering expenses and commissions payable by us, our adjusted net tangible book value as of September 30 would have been approximately $4 million, or approximately negative 2 cents per share of our common stock. This represents a median increase in net tangible book value of 40 cents per share of our common stock to our existing stockholders, immediate dilution in net tangible book value of approximately 92 cents per share of our common stock to new investors. The following table illustrates the per share dilution. Okay, so, all right, so that's the facts. That is the SEC filing. This is what Waitr ASAP put out there. This is from them. This is an official SEC filing. I didn't just make it up. It's not just like random, me just giving you a figmentive, like, or I don't know, like fantasy or whatever news update. This is real. This is on there. This is on SEC filings. Like, it's not hearsay. It's not a rumor. It's there. It's there. Someone said that yesterday that me mentioning the possibility of Waitr being delisted is a rumor. It's a possibility. It's a realistic possibility, even mentioned in their filing. I need to say, I love Waitr. I do. I love Waitr as a company. I absolutely do, and I believe in them in the future. Now then, that's what makes this really frustrating is that, okay, so yes, I do believe that Waitr needs to. Also, this offering is not necessarily paying for acquiring, is it Kova? I don't remember what the, Nova, what the company that they're acquiring, the cannabis company that they may acquire. This is not including that. So that purchase is not included in this offering. They're not doing this offering to pay for that. They may pay some of it out of this, but I don't know. So that is what's frustrating here is, okay, so this was made, if you look at the date of it, this announcement was made the same day that they announced that they were going to be buying that cannabis company. It also was the same day they announced their name change. They announced the name change and purchase of the cannabis company, and then they announced the offering. So it got kind of looked over, I think. I will say again, I really love Waitr. I love what their future looks like, but I don't want to be, I would rather obviously not be the person or not be part of the people who are paying for these investments. I think it would be smarter to be on the other end once these investments start to pay off. So do I think, like they even mentioned that before that their stock got down to 30 something cents. Is it possible to do again? Yes. And the options for getting out of that would be just to basically do a, either have really great news, similar to like last time where Morgan Stanley said they were buying in, or to do a reverse split. They could do a reverse split and take 10 shares to 1, which would make their share price go above that $1 minimum and get it to 5 or whatever. Or no, get it to, well, depending on what the price is. If it stays around 70, get it to $7. So then people who own For every 10 shares you own, you would then have one share valued at $7. Um, I just don't. I look at. Let me pull up here just a second. Just one second. Google.com. Google Finance. WTRH. Okay. Let's go right here. Okay. Oh. Okay. So this is what they're talking about. 34 cents, 32 cents there. 32 cents. And then bam, pop up to 122. I don't know how they pulled that off, what the news was there to get it up to 122. It was on a Monday. Maybe not. Yeah. Well, that's probably a Monday. But so it got up to 122 a week after. Yeah, a week after being at 40 cents, got up to 122. Okay, so we know they can go as low or lower than 30, 40 cents. They are currently at 78 cents. So to me, the company from this point to this point is worth more, but there's also more shares. What does this even show for their... This doesn't show float. Let's find their float. Market beat. I think it's market beat is what I go to. Yeah, we've been there before. Oh. No, I don't want. No, thank you. Okay, let's look. 100 million. Does this show their float? This doesn't show their float either. Shows their market cap being 100 million, so it's more than 100 million. Do they have it? They might have it correct. They may have the float correct here. Yeah, so I think that with this stock offering that it could go much lower, that the price could go much lower. I'm not saying it will. There may be some good news that comes up and the stock just blows up and goes great. But I think it could go lower. 5 days it's dropped 7%. 1 month it's dropped 26%. 3 months it's dropped about 10%. And year to date it's down 72%. Okay. Why does this no? Oh. Mm. Okay. So yeah, I've been such a cheerleader for this company, and I really believe in the future of the company. But if I'm buying back in, I'm probably going to hold off until I can see that it can get back up and maintain some. And we don't know when they're selling. It's at the market, so And we know that the last one ended, the $30 million one ended. Now we're at a $50 million one offering. I think for me, and I'm not a stock advisor, I'm not a financial advisor. I'm not your financial advisor. I can only really speak for me. And for me, while I believe the company is great, I really do. Um, for me, getting back in, I think I would wait until, similar to like what Morgan Stanley did last time, wait until it's getting closer to um, they're doing an earnings call, and then hopefully earnings tell us that they're starting to see some returns from their investments, from their acquisitions. Uh, so you want to see some, like, this is where you want to start seeing some returns. Like, this is where earnings will matter more, because you want to see numbers increase. There's also a chance whenever the company is dragged down this low that a buyout happens, but I can't see. The thing that throws that is the name change to ASAP. Like, I can't see going through all the struggle of changing the name just to be bought out. But I don't know. I don't know. I really don't know at this point. I'm holding off from buying back in until it settles, and I feel like it's found some support, and then I will consider getting back in if it's close enough to earnings call, and I believe that there's going to be some good news with the turnaround and with these investments that Waitr has been making with going into POS systems for restaurants in person, um, delivery at uh, stadiums, um, cannabis related uh, product sales and delivery, and point of sale and just payment processing in general, and then payment processing outside of cannabis and food and what we're doing with that. So that's my opinion. I did want to talk about this. It is bad news, but I've talked about everything good, so I want to talk about what I kind of see as the negative, and I do see that as now a negative. Like, am I saying not to buy? No. Am I saying to sell? No. Am I saying to buy? No. What I'm saying is you kind of have to go off of what their SEC filing for this $50 million offering says and decide based off of that. Um, could there be some random good news that sends the stock soaring? Yeah, yeah, there could be. Um, but we is it worth the risk? That's up to you to decide. But I do want to talk about it because I do want to be. I try to be as open as possible about stocks, regardless if it's negative or positive news. I want to talk about the stocks that I've mentioned, and what's happening with them, and give updates where I can. So, and this is important. As sucky and crappy as it sounds, it's important to talk about. So, I wanted to share that. All right, so I probably won't do a video on Waitr for a while, um, unless there's some really good news that comes up. Uh, I think this is it for now. Yeah. Okay, if you haven't yet, be sure to subscribe. I talk about other stocks other than Waitr, and hopefully have good news on other stocks, and can give some decent tips elsewhere. Okay. Love you all so much, and I will see you all very soon. Bye.